Hi, I'm Pat Keown, a research analyst with Thomson Reuters Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, May 11th. Let's start this week's analysis by taking a quick look at last week's trading activity. The S&P 500 index bounced back from 2 consecutive weeks of losses to eke out a scant gain for the week of about 0.3%. All this gain can be traced back to one trading day, Tuesday, May 10th, during which time the index spiked 1.2%. This was the highest one-day increase for the index since early March. This rally was driven mainly by a surge in oil prices, but a rebound in a couple of previously downtrodden equity sectors, biotech and healthcare, also helped the rally. All right, let's turn our attention back now to the fund flow activity. Let's start by taking a quick look at our macro groups. Equity funds saw net outflows of $3.1 billion last week. Taxable bond funds took in about $656 million in net new money. Muni bond funds continued their winning ways with net inflows of $1.1 billion, and money market funds had $5.1 billion in positive flows for the week. Let's take a closer look at our equity fund groups now, starting with mutual funds. The $3.1 billion in outflows for the group was the 9th consecutive week of outflows, during which time they've seen about $26 billion leave their coffers. This is roughly all the net outflows they've seen for the year to date. Total, they're at about $27.1 billion in negative flows. Last week's activity was a continuation of what we've seen for most of the year. Domestic equity funds are the main driver behind these outflows. They saw $3.2 billion leave last week, and they're down $38.6 billion for the year to date. On the other side of the ledger, non-domestic equity funds eked out a scant gain of $72 million, which puts their year-to-date positive flows at roughly $11.5 billion. Let's move over to equity ETFs now. The group had $3 billion in net outflows last week, their second consecutive week of outflows. This brings their year-to-date negative flows to roughly $13 billion. The major contributors to last week's outflows was the iShares MSCI Eurozone and the iShares Emerging Markets. Both had over $900 million leave. On the plus side, we saw Spider Gold taking about $700 million in net new money. Of note, within this group, we've seen European region funds have $8.8 billion in outflows for the year to date. This comes on the heels of 7 consecutive years of net inflows for the group, during which time they've taken in $53 billion in net new money. The major players in this year's outflows have been the iShares MSCI Eurozone, as well as the Wisdom Tree equity hedge product, which have had about $3.2 billion and $2.2 billion leave respectively. Okay, let's move on to taxable bond funds now. Starting with mutual funds. As mentioned previously, the group took in about $656 million last week. This is their 6th straight week of net inflows, during which time they've taken in $10.3 billion. Major player last week was core bond funds with $1.1 billion in net inflows, while U.S. mortgage funds contributed about $345 million to the total inflows. Moving over to the taxable bond ETF side of things, we see that they had net outflows last week, roughly $1.2 billion. The group's 2nd straight week of outflows. The major contributor to the outflows last week was the iShares iBox High Yield Corporate product, which had about $1.5 billion leave. And then on the plus side of things, we see the iShares TIPS and the iShares Core U.S. Ag products, each taking in about $300 million in net new money. Moving on now, we'll take a look at our Muni Bond Fund group. As I said previously, this group just continues on their winning ways. The 32nd consecutive week of net inflows. Took in about $1.1 billion last week to bring their year-to-date total to $20.1 billion. Major contributors last week, as they have been all year, were high-yield muni bonds, taking in $287 million, bringing their year-to-date total to $4.5 billion. And general insured munis had about $278 million in net inflows, raising their total inflows to $4.1 billion. Let's move on to our last group to look at now, money market funds. A bit of a rebound for the last couple of weeks for the group. Took in $5.1 billion last week, reducing their year-to-date net outflow to $71 billion. Major contributors last week were institutional money markets and U.S. government money markets, which took in over $9 billion and $1.4 billion respectively. Well, that wraps up this week's report. If you'd like to take a closer look at the data, please please join us at our website, www.lipperusfundflows.com. And please join us here again next week where another analyst will be speaking about that week's fund flows activity.